Good morning, everyone. How are we doing today? It is October 15th, Thursday, October 15th, and this is, of course, your daily financial news. Do me a favor, if you are watching this, go ahead and give me a quick thumbs up. Graham Stephan tells me that that helps the YouTube algorithm, and apparently, the sooner you hit the thumbs up, the better it is for us. So do me a favor, hit the thumbs up, and let's get that going. In addition, if you like to get your daily financial news live, not produced, not edited, none of that stuff, go ahead and hit the subscribe button. One of the things that you will see about the One Rental at a Time channel is I do most of my videos live, like this one, whether it's this, hot takes, whatever it is. And just so you know, all of the expert interviews we do every week, somewhere between 4 and 8 of them, those are also live, non-edited videos. They're just recorded in Zoom and then uploaded the same day. So if I record 1 and 8, it's usually uploaded by 11. And, I just choose to do it that way. None of my videos, and I think we've done over 2,000 so far, have been edited, produced in any way. So again, I like to do them live. Over the years, I've dropped my phone once, I remember. I think I've sneezed like 5 or 6 times. You've heard my phone ring, you've heard my dog bark. But again, I value doing these live. Frankly, it's easier for me. I don't get lost editing. I would not enjoy that. So, in the end, if you like your stuff live and we talk about real stuff every day, do yourself a favor, hit subscribe, notification, because we will do daily financial news 7:30 a.m. Pacific every day. So, for you today, we got to start with unemployment claims. I just did a hot take on it earlier. So if you want to see my real thoughts on the unemployment claims, I did about an 8-minute video kind of breaking it down in detail. It did come out and disappoint. The expectation was we would continue our downward trend, the one that Jonathan Twomley called and we usually talk about on Thursdays. The hope was for an 840 to become an 830, right? So again, the floor was intact. The negative trend was slowing, but still there. And as I shared with Jonathan yesterday, again, I'm glad that video is uploaded already. I told him that I was afraid it was going to spike to 900. And we got within a whisper. We got to 898, 198,000. So I think the trend is broken. In reality, you can't call it yet. A single data point is a blip. This number is very noisy. So who knows, next week we could be at 820 and then the trend is still intact. But I'm willing to call it now. I think what I see coming, it gets worse from here, and that is not a warm and fuzzy feeling. Yes, I understand continuing claims were down. I think we went from 10.9 to 10.1. But again, I believe that will reverse as well as the unemployment claim spikes up. My only hope for a stimulus was today's number was horrible. And it wasn't horrible. It was just bad, right? 890 is bad. It would have had to have been 1.1, maybe 1.2 to kick Congress in the no-nos or the nether region to get something done. But in the end, we are in election season. There is absolutely no chance a deal gets done now. I frankly think politicians have been playing you and I, the American people, for months. I don't think they had any intention of getting a deal done before the election. I think the Democrats know that a pissed off and hurt and injured voting population is not very likely to vote for the incumbent. I think that's what they are counting on. We'll see if it happens. I think it's going to injure plenty of Democrats as well. But this is Nancy's game, and we're just all living in it. Unfortunately, you and I have to feel the pain. But this is, I think this is what she has wanted all along. So pretty interesting. Next up, European cities going on pretty significant lockdowns. Paris, London. Again, this doesn't directly affect us day to day yet. I'm watching Europe because, again, if you remember March, they were about 6 weeks ahead of us. So if that holds, we could have some large American cities on lockdown again around Thanksgiving. I like a lot of the articles. I think it was the WHO came out and said that lockdowns don't work. They should be a last resort. I wish my governor in California would get off his ass and realize that. I don't think, I don't, there are no good options. there are just no good options. But I think lockdowns are more dangerous, more negative than people give credit for or understand. And unfortunately, they've already been done, and we have plenty of pain ahead of us. But I'm very nervous seeing what's going on in Paris and London, just because what happened last time. 6 weeks later, last time it showed up in New York. Where's it going to show up this time? Is it LA? Is it Seattle again? Is it Dallas, Texas? Who knows? So something to worry about. On the earnings front, we got a couple to talk about. I'll start with Morgan Stanley. Morgan Stanley is the last quote unquote big bank to report. It is like Goldman. It is like JP Morgan. It crushed. It crushed by over $1 billion. I think we need to start separating banks. Right now, they're kind of lumped into the same category. And at least in 2020, we have consumer oriented banks, which are best reported as Wells Fargo, Bank of America, and Citigroup kind of sits right on the fence. And then we have wealth management, Goldman Sachs, Morgan Stanley, JP Morgan. Those six are kind of separated, with Citi being the closest to the fence. Nowhere to cut it. The consumer bank, Bank of America, Wells Fargo, disappointed. Really pain coming. The Wall Street banks, wealth management, I guess is what I call them. Pretty good quarters, if not fantastic quarters. So again, pretty interesting stuff. United Airlines reported. I think I joked over the weekend. I think I talked about it. I think I said analysts were expecting a loss of $7.53. Well, I don't know. Do you beat a loss? Their loss was even bigger. It was $8.16. Kind of feels like one of those kitchen sink quarters we've talked about in the past where they just threw everything in. Like other airlines, they are burning $25 million a day. Can you imagine piling up $25 million and just lighting it on fire? Well, that's what United is doing every day. Every day. And they are not forecasting getting back to cash flow neutral until sometime next year. So they are going to continually burn cash, 7 figures at a time, 8 figures at a time, every day until Q4 of next year. Wow, that's amazing. On top of that, we got some numbers from Sleep Number. Beds, mattresses. They beat top in line, and more importantly, they raised guidance. Remember, I talked to you earlier in the week. It'll be interesting. I expect Q3 numbers to be awesome, like Sleep Numbers. But I told you I was kind of nervous. Is any company going to come out and have the balls to say, I think Q4 is going to be good, or the next 90 days? And good news is Sleep Number came out and said that. We'll see if they're right. We need more companies to give forward-looking guidance. This is really what we were missing in Q2. If you remember Q2, I think it was 60% of the S&P didn't give guidance. They nope, we're going to pull guidance. We're just going to see what happens. It's still early. We're just into week one of really an earnings seasons, but I'm impressed by Sleep Number. Then we have Fastly. I did a whole hot take on Fastly yesterday. But what I failed to mention, or at least didn't highlight, is this was a pre-announcement from Fastly. They pre-announced a revenue miss, a $2 million revenue miss in the quarter. But when you're trading at 150 times earnings, a $2 million revenue miss slowing growth is an issue. I think it is also fair to say that at least in Fastly's case, their revenue is too much dependent on a single customer. According to news, 12% of their revenue comes from a single customer, and they are thinking it is TikTok. So one of the things that Fastly has to do, and I'm sure their sales teams are pushing for, is diversify and spread out the earnings. So it is pretty interesting. What else? The other thing to really talk about today is one article I read about is U.S. stock valuations. As many of you have been watching this channel for a long time, I suffered through a similar evaluation as in 1999. But more and more people are coming out and saying young and dumb investors are on the cusp of paying a mighty price. And if you know my story, I successfully turned roughly $7,000 into almost 200, only to lose it 80% of that very quickly. So many of you are on the cusp of doing that or potentially doing that today. And some of the numbers that are about the S&P. Right now, the S&P is trading at 22 times forward earnings. 22 times. That is 50% higher than the last 10-year average. And again, remember, we are in a health crisis, people. We're 22 times forward earnings and we're 50% higher than the prevailing trend. Crazy. Tech is leading this trend. Highest growth. Snowflake, 150 times forward-looking earnings. Really? 50 was the number in 99. Now we're 150? Really? Millennials, it's the new investors, what we generally call the Robin Hood traders, but that's not fair enough. New traders are coming in everywhere. So again, millennials are in. But what I'm seeing is not just stock buying, but now with momentum and the apps, I am seeing and reading about lots of people who are buying options and investing on margin. If you've watched Meet Kevin now has morphed into a stock guy from a real estate guy or a stimulus guy. I don't know really what he's doing now, but he's talked many, many times about impressive margin that he's buying on. Folks, he's making $1 million a month on YouTube. So of course he can buy on margin and suffer the losses. Telling the average trader who has a regular 40-hour job to trade on margin should be a crime. Margins can bury you. And on a down day like Fastly, if you are trading Fastly on margin, you are wiped out. I can't believe folks like Meet Kevin are really talking about and encouraging buying on margin. Most of us, 99.9% of us, don't have seven-figure YouTube money to back us up every month. And oh, by the way, he'll just go create another stimulus video that gets watched 100,000 times and make that money. It's not fair. The last thing I want to talk about 99 is when I was buying in 99, the forward-looking call options, which is generally thought of as a bull indicator, was $100 billion. In 2007, and it was again $100 billion. The call options that are in the next 2 weeks, 500 billion today, 5x where I was. We could be on the precipice of some pretty shockingly bad days. Again, you never know. Markets can remain unrealistic for a long time, but boy, when I see numbers that make my experience in 99 feel like a drop in a bucket, I get nervous for folks. So if you got some profits out there, stop telling people you have them and actually take them. You don't make a profit till you sell. Take your original capital off. Don't be an idiot like I was and stay fully invested, go on margin, trade options because you think you're better than Warren Buffett. I'm here to tell you you're not. You got into a market that was rising for the last 100 or 120 days. It's not normal. It will come back to reality. And if you are overinvested and don't see the turn in the trend, you will lose significantly. I still feel like an idiot 20 years later for losing six figures for being stupid. I'm trying to share my story so it helps some of you. All right, that's the daily financial news. Just so you know, I have 3 interviews today, one at 8, one at 9, one at noon. And I'm also going to do a hot take or a video on Toys for Tots. I did a video earlier in the week about Christmas being canceled. And frankly, my mother called me out. She goes, "What are you going to do about it?" So I'm going to do a video on that and really encourage all of you in the one rental at a time family to plan ahead. If you have the ability to donate to Toys for Tots, let's do it early so that we can put some smiles on some kids' faces. That video is going to come out, probably be my last video of the day. All right, everybody, take care of yourself. Again, remember there's a Toys for Tots video canceling Christmas coming out. Let's make sure we watch that one and make some donations and really surprise my mom on what this channel can do for Toys for Tots. All right, everybody, take care. Bye.